Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, mortgage resets were supposed to be a problem. Turns out not so much. And the future of autos in Canada, will it look anything like the past? Plus, growing our economy one employee at a time. That's all ahead. First, for the week that was in business, it's time for the briefs. Insolvencies in Canada remain near record high levels, according to the Office of the Superintendent of Bankruptcy. Consumer filings rose 2.3% in 2025, second busiest since tracking began in 1987. Business insolvencies did drop in 25 from the year prior, but they remain well above pre-pandemic averages. A read on jobs in the U.S. this week showed that U.S. employers added 130,000 jobs in January, and the unemployment rate fell to 4.3%. But those positive data points were offset by downward revisions to the job numbers in 2025 and 2024. The report showed there were 7.5 million unemployed workers in the U.S. for the 6.5 million job openings in December. Even as it loaned Canada Post $1 billion this week, the federal government said its support is not a long-term solution for the Crown Corporation. The new loan is in addition to a $1 billion loan last January. Canada Post is struggling under mounting debt and falling revenue as it seeks to stave off mounting losses. Canadian Airlines canceled flights to Cuba after the Caribbean nation warned it could run out of jet fuel. A U.S. oil blockade limits its new supply. Air Canada, WestJet, and Air Transat have all said they will ferry passengers home already in Cuba, but suspended all other inbound flights. The cancellations affect more than 100,000 tickets in February alone. Customers of a digital wallet system operated by Edmonton's Everyday Payments say they're missing money. Customers in 4 provinces have reportedly raised alarms about missing tips linked to the payment platform. It's operated by Toronto-based XTM Inc. The service is designed to allow for real-time payments to staff. A diplomatic spat erupted this week after U.S. President Trump claimed the newly built Gordie Howe International Bridge between Windsor and Detroit is somehow mistreating the U.S. The bridge was jointly constructed but funded by Canada, which will recoup its costs in tolls over time. The president's demand that the U.S. own half the bridge is easily met because it already does. And those are your business briefs. With rates higher, about half the mortgages in Canada reset last year or will reset this year. But far from the tidal wave of delinquency that was feared, it turns out homeowners are pretty resilient. Tania Bourassa-Ochoa is Deputy Chief Economist at CMHC. Thanks for being with us.
Thank you for having me.
So we were worried about what would happen. We are seeing little pockets of concern, but for the most part, would you say that it's been a pretty stable response to the resets?
Absolutely. I mean, when we were facing this massive renewal wave a few years back and looking at the big gap in interest rates that homeowners were going to have to face, I think there was reason to worry a little bit more than what we're actually seeing right now. And basically, borrowers are showing, as you mentioned, to be more resilient. They're adjusting in many ways, adjusting their budgets. They're also making adjustments at renewal as well. And so we're seeing a lot of these consumers choosing longer amortization periods, which is reducing their monthly mortgage payments. And so that has helped significantly. And I would add the mortgage regulation that is in place has also helped safeguard basically that increase in mortgage arrears.
Yeah, and this is an important point because the stability of the system is better, of course, when people don't have to walk away from their mortgages. But it may not be better financially for those people if they take a longer duration on the mortgage, if they actually are putting down less capital, they actually own less of the home potentially at the end of it. Is it a trade-off worth making, though?
Absolutely. I mean, we have seen the majority of consumers opting for that longer amortization period. It is a trade-off, as you're saying, and it comes with a cost. So this short-term affordability in some way is helping many to navigate this financial pressure to make ends meet at the end of the month. And so it may be a good idea for some, but it's just important to note that it does come at a cost. These borrowers are paying a lot more interest rates, a lot more interest payments basically at the end, and are paying their mortgage for a longer period of time. So it's really this trade-off between short-term affordability and long-term wealth.
We did, of course, the reason why we saw such a huge increase in home prices was that period of time where rates were still very low. And because of pandemic, in an unforeseen way, people's savings went up, right? A lot of us had more money than we expected to in the pandemic. Unexpected. So we saw this crazy response in the housing market. Now, Tania, it's probably the reverse, right? Rates are higher and likely to kind of stay stable, presumably. And people have now dealt with inflation and, different price pressures. What's the outlook for the housing market, given that things have kind of shifted almost 180?
So we're definitely seeing a lot of cooling, I would say a generalized cooling session in the housing market. So we're seeing consumers that are shying away a little bit from the market, are not necessarily getting into the market. Some first-time home buyers are still not able to qualify. So despite this cooling, and when I'm talking about this is really at the national scale. Prices are still relatively high, and so affordability is still an issue for a lot of consumers.
So I know you guys have just recently put out your outlook for 2026 in terms of kind of where the housing market goes. What's the most likely scenario in your view?
Well, in terms of new housing supply, we're starting to see that, new construction has been slowing down a little bit. So it's not necessarily good news in terms of improvement for affordability down the road. In markets like Toronto or Vancouver, we're definitely seeing some developers that are scaling back when we're looking at condo projects, for example. And so there is that risk that, there's supply shortages that will be appearing down the road in the shorter term.
So good to have you, Tania. Appreciate your time.
Thank you so much.
Tania Bourassa-Ochoa is Deputy Chief Economist at CMHC. Coming up, Canada is doing a necessary rethink of the auto sector here. We'll take a look after this.